What's up, everybody? Schwab stock is down almost 45% from its recent high. And in this video, I'm going to tell you why I think Schwab stock could increase by 57% over the next few years. And there's no BS here. I'm going to show you this is a fundamental driven analysis, meaning it's looking at their business and what I think the value of the business is. In this video, I'm going to tell you how I get to that number. And then I have created a tracking portfolio moving forward that any stock that I say I think is undervalued or overvalued, I'm actually going to track that in a fake money portfolio just to share with everybody, the accuracy of some of this analysis I do. And then anytime I talk about a stock, I'll let you know if I actually own the stock in my own portfolio or not. And so I'll share that at the end of the video. All right. Schwab stock. Why do I think it could return 57% per year? It's pretty basic, right? Stocks trade no matter what people on Reddit and Wall Street bets and meme stocks and all this junk want to say. Stocks don't trade off of just meme go to the moonness. They trade off of valuation and basic valuation multiples. There's different ways that you can assess the multiple of a stock or the valuation of a stock. If it is a growth, an unprofitable growth stock like Datadog, which I own, or Snowflake, a lot of people look at those on a price to sales basis, thinking that at some point in the future, they're going to get to profitability, and then you could value them on a PE basis. For Schwab, because they've been in business so long, a PE ratio is a decent thing to look at and value Schwab on. So what we can see is that because of this drop, this black line right here is Schwab's share price. And you can see the share price is way down, and we're actually down to levels that we traded at in 2017, which is kind of crazy. That's a long time, right? And so since then, earnings have grown. Earnings per share has grown from $1.61 to $3.90, but the stock is trading at the same share price. And so as scary as this recent drop in the banking crisis is, we're getting an opportunity to buy Schwab at a very undervalued PE. It's trading at a blended PE of 13.52. And when we look, its historical PE ratio, the average PE ratio since 2002 or 2003 has been 26. Now, I don't think Schwab is going to trade back up to 26 PE. That would be this blue line right here. To me, that's unrealistic and would be setting us up for failure if we expected that, especially because I think lending standards and, we are heading into a recession, which hurts the earnings power of Schwab stock and different investment firms' stocks. So there's a lot of things working against Schwab ever trading back up to a PE of 26. But the good news is it doesn't have to. From a PE of 13.5, if they hit these analyst expectations for earnings growth of -7% in 2023, 25% in 2024, and 15% in 2025, then you're looking at a total rate of return of 50% for 16% annualized. Now, one thing to look at is the analysts could be off about these earnings expectations. If we want to look at Schwab back before the great financial crisis, this number up top is the earnings per share growth, right? That's how you get the PE ratio. Earnings per share were at $1.06 in 2008, and you can see they dropped to 68 cents in 2009 and then 38 cents in 2010. And it took them, so remember $1.06 in 08, it took them all the way until 2015 to get back up to the earnings per share that they had prior to the great financial crisis. And so if we take the share price from we'll just even go the high before or close to the high before 2007, all the way until it took them back to get that earnings per share back up to $1.03 was about 2016. So if we look at that entire time, the stock dropped somewhere about 50% or so in the great financial crisis. But over that time period, 2007 to 2016, so 9 years, the stock was essentially flat, right? And that's not a great return. But when you have one of the worst financial catastrophes in history in between those two dates, it's really not that bad as long as somebody was able to own their continue owning their shares and not invested on margin. But even if somebody had bought before the great financial crisis and held till now, even though the stock's down massively right now, they held till now, you're still up 120%. And that is from the peak before the great financial crisis to a 40% drop right now, or 35% drop from highs right now. If somebody would have bought after, a significant drop, not even the bottom, but we'll just go back down to when it was a PE of about 15 or 16 in 2008 and held till now, well, then you're at a 9% annualized return just about. And again, this is after this crazy drop, right? So what if they held until, prior to this crazy drop? Well, then you're up 13% per year. So the whole point is that the Schwab is trading at a significantly discounted PE ratio because of the fear going on in the banking system. And if things don't just go to hell and completely fall apart, then even if we go into some type of recession, which I think we will, over the long term, and by long term, I mean several years. So this is the forecasting calculator, and this shows out a few years. If they hit those earnings growth numbers, but then and we'll just take it to like a 10% earnings growth, which I think is totally possible on average over the next 9 years or so. They traded a PE of 15 in 2029, which sure, that's a long time. You're getting 14% annualized rate of return, which is, if you do that over a long period of time, it makes you rich, right? And so, from these perspectives and from a valuation perspective, Schwab is trading at a very rare discount. What I've done is, again, I'm going to start tracking this stuff in these calls when I call them overvalued or undervalued. And so I just created, this is Stock Unlock. I created a long portfolio, not real money. And I've gone ahead and added Schwab as the first one I'm going to start tracking in there. And I'll just start sharing, this at the end of YouTube videos where I make these like overvalued or undervalued assumptions. And so I've got it in here. The current share price is about 51.46. Then I put it in, I did it a few minutes ago, but I'll start actually doing it live in these videos. I put in that I bought, again, paper money, at the average share price of 51.33, which is what it was a little bit ago. I'm just going to do about $1,000 of each one, just so they're all about the same. And then we'll start to track this portfolio over time and see like how accurate my predictions are or my forecasts are. I'm also going to do a short, right? Which doesn't mean I'm like actually shorting these stocks. I'm just calling it short because these would be the stocks that I call overvalued or I think are in bubble territory. I'm not shorting any of them. And if I ever do, I'll obviously disclose that. I'm going to do a video here on NVIDIA, why I think it's overvalued. And I added this one to the short portfolio, but we'll also see kind of how those perform too. And if they get down to the values that I think that they should be, then I can obviously sell this. And so what we'd want to see is if I'm right, the short portfolio will be down and the long portfolio will be up. That's how you'll know if I'm right or not. Now, as far as do I personally own Charles Schwab? I do. I share my portfolio here regularly. I'm not going to do it every single day because I think that's too much, but once a week or once a month or something like that, or if there's significant changes, to just transparently show my real money portfolio and returns. But I also write about it in my email newsletter, which is linked in the description below, austin.substack.com. And that just allows me to go more in depth. On April 8th, I covered whether or not I think Schwab is in crisis mode. And I said not so much, because their CEO and founder actually came out with a letter to shareholders talking about kind of a lot of strengths in the business. So I'll link to my newsletter in the description below. If you want more in-depth stuff than I can cover on YouTube, that's the best place to do it. And as always, if this was valuable, please like the video, subscribe to the channel, and then share it with friends, because that helps the algorithm recommend these videos and kind of surfaces above some of the meme stock, junk stock, penny stock stuff that's out there, short-term stuff. So if you want to help spread the word, that's how you can do it. Thanks a lot. We'll see you in the next one.